Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting Asian session live market analysis, giving the expected market moves or the forecast for the weeks 16 to 20th of September. So we are in the big beginning on 16th of September. Between 5 and 5:30 GMT, I'll try to give the forecast as well as the expected market range in this particular week. Then later on, whatever the questions you have, you can ask me. I'll be glad to answer those questions so that you'll be able to get the full understanding of my forecast as well as the trading strategies besides the market reading technique. Now, last week I was explaining to you that the forecast algorithm says that there will be further quick rises in the case of Euro and GBP. And on Thursday, I was explaining that there will be upward gap opening on Monday. Then the market is expected to make further rise. So that is what happened now in the market. So this statistically derived forecast gives the following expected market moves for this particular week. Besides, I'll fine-tune the forecast using the market reading technique, that is trying to track the players of the market. So we try to track the players and try to find what is the hidden agenda of the players by identifying the type of moves they are making in the market. Then accordingly, we will be in a position to fine-tune our trading so that the entry and the exit decisions will be without any much of ambiguity, so that we'll be able to take the positions following the type of moves they do it during different sessions of the day. So we follow the timings, we follow the market moves. Then finally, we also follow the levels what they have shown it in the market. So that we do it with the help of the market trading technique. Then still, we do not want to take a chance. So we also use the trading strategy of limiting the risk using the hedging order in a loss-making position. As soon as a position is taken, it will incur loss or it will show loss or negative equity. And then subsequently, when the market moves in our favor, we'll be able to see the profit in the position or the equity will grow. Then in such a scenario, it is not only limiting the risk, we try to maximize the profit in a profit-making position. So by using the trailing stop and the trailing limit order or the take profit order, which can be moved away from that of the market from time to time when the trailing stop is progressing towards the market, and we find that the trailing stop is not hit in a profit-making position. So that way we try to maximize the profit. So we follow the forecast as a guideline. Then we fine-tune the forecast, reading the intentions of the players. Then still, in order to limit the risk, we use the trading strategy. So as a result, we will be able to take only 30 pip risk at any given time. And even when we block 30 pips, when the position is hedged, we try to come out with profit on either side or accept a small loss in the hedge order and earn more than that in the profit-making position. Or we reverse the trade also. So when you use hedging, there is enormous scope for us to decide on alternative trading strategies. So we will not get struck. If you want to use the alternative trading strategy, invariably we have to close the position and try to take another position and try. In the market, there are only two alternatives. One, do a buy and sell trade or a sell and buy trade. So if the position is hedged, we'll be having a buy position as well as a sell position. So we can close any of the unfavorable position following the type of market moves when you do the market trading and try to maximize the profit on the other side also. which is available only when you use the hedging in the same currency pair. Otherwise, the limited opportunities will provide when you try to use some other pair in order to hedge it. Now, let me explain to you the forecast. The expected market moves for this particular week. So this is the third week of the month. As the week progresses, you find more aggressive moves are happening in the market. So slowly, the players gained the levels on the first week and the second week. Then subsequently, first week they have been doing the trend reversal briefly. Then second week, they started gaining the levels. So from 2nd to 6th and 9th to 13th, they've been slowly gaining the levels. When they gain the levels in the case of Euro and GBP, many were thinking that Euro is not having enough strength or GBP is not having enough strength. And excepting on Friday, I have seen a lot of comments in fxtrade.net that GBP appears very strong and it may not drop, so better avoid taking sell positions. Otherwise, everybody was telling that any pullback, we will try to sell and try to book profit. And they have been giving profit on Monday and Tuesday when the traders have taken the sell position during the pullback. And then subsequently, when they made a small drop in the case of Euro and GBP, they were able to book profit. And especially in the case of Euro, around 1.33, on either side, they made the moves, and which gave the confidence to the traders that above 1.33 sell and below 1.33 buy. That sort of trades they have been doing, but invariably they hesitate to do buy and sell trade. So this is what happens when you develop the market feel, that is, you become biased to that of the market, or develop a bias feel and continue to hold the bearish feel. Then suddenly when they turn the market to the bullish momentum, then you become surprised. And that is what you come across among that of the traders who strictly follow technical analysis. And there are some comments I have seen on Friday, also in the case of fxtrade.com, that the entire technical analysis may become useless when they use the fundamentals. Valeria was making a comment of that nature. So I was really interested in understanding it, and that's what happened now. So when the technical analysis collapses, immediately we take a fundamental analysis. And today's fundamental analysis is with regard to channel position. So what it can make in the market for such a big gap opening. So it is a question of only creating the hype. But this was being understood by that of the forecast algorithm, and which is given even the last week that they will be making a quick rise during the start of the Japanese session, and that's what they have done it. And then already you find from the Friday close, Euro has gained about 66 pips, GBP has gained about 76 pips, and a massive gain was made by Australian dollar. See, Australian dollar is closer to that of the low with 81 pips first net change, and just they went up to 93.95. See, imagine that from that of Friday close of 0.9244, they gained about 200 to 240 pips straight and made a big dump from there. And after coming closer to the low, they are not cutting the low. So this is what they try to do it in the market. We need to read their intentions. So the expected market moves for this particular week, a quick rise and a slow slide towards close of Japanese session. But we cannot do sell and buy trade. The slide already they have done it in the case of Australian dollar from that of the high. In the case of Euro, they have made about 20 pips dip. And in the case of GBP, they are holding high. This is mainly to handle Euro GBP cross, which has come below that of 0.84. On Friday, you know that they have been holding around 0.84 and dumping all the positions, and then towards close, they just dropped it to 83 area. This is what I have been telling when Euro GBP was around 0.8775 level. Then they will try to make a small gain closer to that of 83, 93, 95 and things like that and start making further drop. And tomorrow you will come across they are making a big drop in the case of Euro GBP cross. Then with regard to the N crosses, you find that they are showing a nominal positive net change. Euro Yen is showing about 12 pips positive net change and GBP Yen is showing about 12 pips positive net change. And that is because now Euro and GBP gained more positive net change when compared to that of less negative net change in the case of USD Yen. They have been slowly gaining the level and holding closer to the high in the case of USD Yen. And they are expected to make further drop in the case of USD Yen when they want to gallop upward in the case of Euro and GBP, make further big rise in the case of Euro and GBP, and then subsequently they will make one big drop in the case of USD Yen below that of 98 area and then start reversing it and start gaining the levels, holding Euro and GBP and gaining the levels in the case of USD Yen and USD CH. So alternatively, you come across the USD weakening move, then some USD gaining move, and also contrarian move. That is how they make the moves in the market. So we need to read that from time to time. Now, why I gave such an explanation is many of the people think that when I give the forecast, they wanted to know which currency it refers to. Then when I say it refers to that of Euro and GBP, immediately they think that the opposite will be happening in the case of USD Yen and USD CH. They ask some questions, but it is not so. So that is why I took this situation to explain that when they gained more in the case of Euro and GBP and Australian dollar, they made less drop in the case of USD Yen, USD CH and Canadian dollar. So this we need to understand that how they are able to bring in the contrarian move and handle the crosses. Then tomorrow 17th they are expected to make a small dip during start of the Japanese session and rise. And tomorrow European session they are expected to make a very big rise and swing at the higher level. Then continue to swing at the higher level during the US session tomorrow, because many people will be expecting or talk about the Fed decisions. Before Fed decisions, people might be reluctant to commit positions. Then that will be on Friday, the Wednesday. Then they will make a small dip as if it is going to be a decision to induce USD gaining move, and then subsequently people will talk about that and then rise. Then they will make a very quick rise and slide, and people will think that it is going to slide after the Fed decision. But once the Fed decision is announced, they are expected to rise. So we are on Monday. I am giving the forecast for Wednesday. You can watch and make the comments here in the blog or in fxtrade.net blog, where the recorded webinar will be available, so that now I'll be able to explain to you more in details than how exactly the forecast has to be made use of. Then 19th, Thursday, swing and rise moves are expected during the Japanese session. A small dip and a quick rise, small dip during start of the session, and then quick rise during the European session, and slow swing and firm up move, again the intentional move they are expected to make. Then a small dip and rise during the Friday. Then slow swing and rise moves are expected during European and US session on Friday. Then 23rd to 27th will be the last week, fourth week of the month, and they are expected to gain much more levels. Quick rises are expected in the market. So understand that they don't make trend reversals during the mid-months. So if any time you expect that suddenly Euro and GBP can come to 1.31 or the GBP can come to 1.55 and things like that, that will not happen during the mid-month. They only do it during that of the last week and the first week of the month. That is the monthly trend reversal. Then you come across the weekly trend reversals. During the weekly trend reversals, they make week beginning false move. So what is going to be the week beginning false move on today? They gained the levels during start. From there, they will make a slide, but still they will not go to the Good Friday close level. And then again, they will make a swing and quick rise, and then make a small dip or a swing or a slide to start with during the US session, and then firm. So week beginning false move will be sluggish. So small dips, or when they make a downward stop from below that of the low, one has to buy it. And we have the hedging facility. So when you have the hedging as a tool, suppose you buy around 1.3353 or 5 to 10 pips below that, if they make a downward stop, then 1.3350, imagine we are taking a buy. Then 1.3320, you can keep a hedge order. In case, as you expect there going to be a sudden drop, your hedging will be making profit. You close your buy position and maximize the profit of the sell side. But that is not going to happen during that of the second, third weeks of the month. And so when they hedge, and if the hedging is making loss for about 10 to 30 minutes, you close it with 1 or 2 pips loss and try to keep another hedge order below that and try to trail it. You'll be able to see profit on your buy side. And so don't every time imagine the trend reversals. That means they are not understood the player's psychology. So if you want to win and trade along with them, we need to read their intentions. So reading the intention, one is based on my forecast algorithm. The other one is for the intraday, the market trading technique. So on Friday, I was telling that they will be making the upward gap opening, but that we will not be able to do it with the help of the intraday observations. So we need the forecast. But still, the intraday forecast, if you use it carefully, when they make an intentional gain slowly, intentional move slowly on the upside, which has to be alternated with that of the extended move. So extended move will be further quick rise. Always the extended move will be the quick rise or quick drop. Then they hold, stop cutting the high, hold, and slowly slide. If it is on the higher side. If it is on the lower side, they quickly drop below the initial low and come down and then form the new low and slowly reverse in 2 hours time frame. So that is what. After the intentional move, if you are able to follow that, always the intentional move alternates to that of the extended move. In between, they make the mid-session, the swings, and also gap time, the false move or the stop, and session start and session close time, the stop. Then you will be able to predict. You don't require any more thing. And so, as I explained that these are all the expected market moves for this particular week. And you can fine-tune it with the help of the market reading technique. I have been explaining it for several times. And if you've got any doubt, kindly ask me so that I'll be able to explain it. Otherwise, I'll presume that you understood the technique and trying to make use of it. At least use it as a guiding factor in your trading analysis. Now, I'll go to that of the expected ranges in this particular week, 16th to 20th of September. In the case of euro, 1.3325 could be the low, 1.3775 could be the high. And so far they are shown 1.3356 and 1.3382 as the high. The case of GBP, 1.5925 could be the low and 1.6325. And you will come across a massive gain in the case of GBP and compared with euro in order to drop euro GBP. So far they have shown 59.31 is the low, 59.58 is the high. Then in the case of yen, 975 could be the low. Below that of 98 area, when they come quickly, you can take a buy position. And so far they have shown 98.50, and afterwards they will reverse and slowly gain. You will find that next week, the last week of the month, they will make some aggressive gains in the case of yen. And on 30th, of September, we should come across more aggressive gains in the case of USD-yen. So it is especially forecast on 30th of September. We try to simply buy USD-yen and see a massive rise of 200 to 250 pips. Then in the case of USD-CHF, 92.25 could be the low, 92.32 they have shown it, and 95.75 could be the high, and 92.58 they have shown it. And gaining up to that of 93.50, they will make a slow gain, and from there they will make one jump. Whenever they are holding euro and GBP at a higher level and not making a big rise, and these people will try to gain the levels in the case of USD-yen, USD-CHF, and USD-CAD. Then in the case of USD-CAD, 1.0302 they are shown, 1.0300 could be the low, and plus or minus. They are all arithmetically calculated levels. So there will be small standard deviations for that, and probably about 25 to 50 pips. Sometimes you may come across 100 pips when the market makes an extended move. But still around this, so you will not come across any big drop or a big gain of 250 pips, 300 from these levels. Okay? So if it is up to 100 pips, then you can use the hedging to handle that. So without any fear, you can do buy and sell trades in all the currencies. Then 1.0322 they will be the high, and they are shown the high, and 1.0575 they could gain suddenly from that of the midweek. Then Australian dollar 92.50 could be the low, and 93.18 they have shown it, and they could gain the levels to a certain extent, and afterwards without cutting the high they could make a drop, make a downward stop as it is expected to do the wide rate swings, and slowly gain the levels along with that of euro and GBP from that of the drop level. Then it could go up to 0.9550 area. So far they have shown the high as 93.95. So these are all the expected ranges in the case of the four majors and two commodity pairs, and I have given the forecast levels as well as the shown level already shown in that market. Those levels are given. So you can just watch it and use it for your trading decisions, especially with regard to the entries and exits. Coming to that of the market reading technique. Now these are all the initial lows and the highs we note down around 3:30 GMT from the start of the day. So I have given all the 5 days of the week. Last week, I just shown all the 4 days when I was giving the forecast and explaining to you how the initial lows and the highs could be used when you note down on a daily basis to understand whether they are making an upward move or a downward move or a range-bound swings. Then accordingly, you can take your trading decisions. Now, today, they are showing the initial low is 1.3356, much above that of Friday close level, 1.3296, and 1.3382 is the high. They have not breached the low or the high. In the case of GBP, 1.5931 is the high they have shown low, and 1.5954 was the initial high. They cut the high and formed 1.5958, and they are holding around 1.5954. So they may not cut the low in the case of GBP. In the case of Euro, they may just cut the low to create the bearish field, but GBP, they will just pretend with another 5-10 pips dip you can buy, and they may not breach below 93.5931 and start going above 1.60 very soon. And they may not look back below 1.60 after that. So you know that GBP is the currency which is used for creating the market sentiments. Keep that in mind. Then in the case of USD-yen, 98.50 is the low, 99.11 is the high. They have not reached the low and the high. In the case of CHF, 92.32 is the low, 92.58 is the high. They have not reached the low or the high. Then in the case of Canadian dollar, 1.0320, 1.0322 are the lows and the highs. They have not reached. And Australian dollar 0.9318 and 9395 are the lows and the highs. They have not reached. In the case of Australian dollar, they are holding closer to the low. Whereas in the case of Euro also, they are holding closer to the low. But in the case of GBP, they are holding it closer to the high. And also in the case of yen, we are holding it closer to the high. And in the case of CHF, they are holding the middle level. And in the case of Canadian dollar, they are holding closer to the low. So always watch it. And then we will come to the trading items. So after market reading, what we do is we note down the initial lows and the highs, and it is the initial low and the high for the 24 hours market. So up to 20:30 GMT or end of US session, the same initial lows and the highs will work. Then entry. When a currency pair is near the low or the high and not reached there for 30 minutes from the start of the session, that is the initial session, 1.5 hours. We buy near that low or sell near the high and close by late session. It's a swing trade. Then we keep 30 pips below the buy or above the sell, the hedge order or stop to limit the risk. If the going is good and the position makes about 25 pips profit, keep stop at entry and remove the hedge order to eliminate the risk to nil. Then exit. By late session, when you entered early session, by late session or end of the day, if the going is good and the stop at entry is not being filled, then you can extend the trade up to end of the day. Otherwise, try to close it during the session close time and during the gap time and the next session start time. They will definitely make a swing because 24 hours they cannot continue to rise. They have to make swings in the market. This part of the game. Market means swings. So you can just book profit, or if you are comfortable seeing a good profit, like Friday you are taking a buy and holding it, then you can keep stop at entry and hold it. But if you are taking buy now, better you close by end of the session and re-enter again during the next session. Then keep about 45 pips initially the limit or near that of the high as a limit. If the spread is more than 40 pips between the low and the high, then you enter the currency. Till such time you watch. So at the moment you come across a spread only in the case of USD and Australian dollar. The others are showing lesser spread. So there's no point in taking a position. If you take a position, you will be holding it for a more time. Then, after keeping 45 pips limit as a take profit level, then you keep stop at entry so that the market can either hit your stop or your exit level. And what you can do is, when the going is good, you can move the limit entry take profit level to 75 pips profit level and try to make the stop at entry as a trailing stop. So that way, when the trailing stop maintains about 25 to 30 pips from the entry level and you continue to trail the entry stop or continue to trail the profit taking order, then what happens? Your profit becomes maximized. So till the going is good, you can just continue to do it. And once the market hits your trailing stop or the limit, accept the profit. Then give a gap of 30 minutes before entering into another price. Otherwise, wait for the next session start. Relax and come for the next session and look at the market during the start of the session. So in order to give a better understanding, I have given it in the form of a table because many of the people are not familiar with it of the timings used by the players. So I just prepared it in the form of a table or column so that you'll be able to really understand how they are able to manipulate the market. So each session is subdivided into early, mid and late session. There are 3 sessions: Japanese, European and US session. 0030 to 7 GMT is the Japanese session. 7 to 7:30 is the gap time. And 7:30 to 13 GMT is the European session. 13 to 13:30 is the gap time before the next session. And US session is from 13:30 to 20:30. Then 20:30 to 0030 of next day is a long 4 hours gap time. So during that time only they make all this sort of gap openings. Then each session is divided into early, mid and late. So first 1.5 hours, 0030 to 2 GMT is the early session. Then mid-session is from 2 to 5:30 GMT. It is about 3.5 hours. The late session is 5:30 to 7. So it is 1.5 hours. Then there is no split with regard to gap time. Then early session in European is from 7:30 to 9. Then mid-session is 9 to 11:30 GMT. It is a shorter time frame when compared with the Japanese session. So 9 to 11, 2.5 hours. So here it is 3.5 hours. Then 11:30 to 13 is the late session. Then in the US session you come across early session 13:30 to 15 GMT and 15 to 19 GMT 4 hours. So here 3.5 hours gap mid session. Here 2.5 hours mid session and 4 hours mid session. Then 19 to 30 is the US session. So early and the late sessions, they handle the majors and the commodity pairs. Mid session, they handle the crosses. So note down these timings and watch the market, all the live market code page. You will be able to really understand. Sorry, there is a call. The late sessions, they handle the majors and the commodity pairs. And during the mid sessions, they handle the crosses of the majors and the commodity pairs. So they handle only two currencies at a given time. So at the moment, they made only 40 pips and above the spread in the case of USDN and Australian dollar. So that is how they handle it. So they handle USDN, Australian dollar, and their crosses. Yen, Australian dollar, then other Australian dollar crosses, other yen crosses like that. Then gap time moves are false moves. So they always make an opposite move to that of the gap time. Suppose if they rise during that of the gap time, then during the start of the session, they will make opposite move for first 30 minutes from 7:30 to 8 GMT. Then later on, they try to make their own intentional move. So we need to understand that. Then, so early and the late sessions are ideal to take positions in the case of majors. Mid sessions are ideal to take positions in the case of crosses. So follow the market timings, the net change. So follow the market time in GMT here. Then net change, which is shown here. And market spread between the high and the low, to determine the entry and the exit levels and times using the live market code page. If you use all these things, simple live market code page can act as a tool for you without any distractions. And you need not bother about the technicals or fundamentals, and you can just note down when such important events are going to happen, and always keep it in mind they are trigger times. That's all. And there is no guarantee or no need to assume that if the data is going to be positive, they are going to make a positive move, or if data is negative, they are going to make a negative move. Not like that. And we can always understand that they can give excuses for their move and try to justify it. Now, I'll take up the questions which are asked here. Meanwhile, I'll show the last slide. Okay. Aditya has got a question. How can you differentiate between extended move and the extended stop? Extended move is for 2 hours and they will make only for about 50 to 60 pips. And sometimes they just stop it with 25 pips, 30 pips also. But extended stop and is for definitely 150 pips. And they reverse and come back to the initial low or the initial high in about 30 minutes to 2 hours. So suppose they make an extended downward stop from here 1.33 to 56, they just come down to 1.333226 and reverse and come above 1.3356 in a matter of about 30 minutes. But earlier they have been doing it in 30 minutes time frame as a knee-jerk reaction. Nowadays, because of the volume, they try to take about 1 hour, sometimes one session. It depends upon the market value. Then Krika. Do you see new high in stock until the end of the year? Yes, slowly the stock market is expected to gain the levels. Then Basim. Is it okay to buy Euro, Canadian dollar, GBP CAD instead of going long as it will make higher pips? See, as far as the cross trading is concerned, as I explained to you, you have to watch whether it is closer to the low or closer to the high. Simply buying it without any rationale is not a good idea. So see whether they have made the spread and whether it is closer to the high or closer to the low, whether they made about 70 pips spread in the case of cross. And only then such crosses will be handled. Suppose you take a position in the case of Euro CHF and there the spread is very narrow. Then you may be aiming only about 5 to 10 pips profit. You have to always look for 70 pips spread between the low and the high. As I explained, see here. I was explaining to you, they have been handling the Aussie and cross. So you can understand how they have done it. You find 70 pips spread. So these are all their own strategies. I'm not giving it as my own strategies. Please understand. Sunshine, could you repeat what you said about GBP? I said that it is the currency which they use to create the market sentiment, and they quickly drop GBP to create bearish sentiment, similarly quickly rise to create the bullish sentiment, and it is a sentiment creating currency. But now then driven. Euro USD to rise more in 2014. So let us just finish with regard to 2013, then we'll come to 2014, please. When a hedged position profit, when should they close the original position? You have to see that consistently the hedging makes profit for 2 hours. Then you know that they are making an intention move in favor of the hedged condition. So that means 2 sessions and start of the 3rd session, they will make a drop. So you try to close the buy position and on the sell side, you book profit during that of the 3rd session drop. In a hedged position, profit should be closed the original position. See, it all depends, based on the market momentum, and also if you are doing it on the midweek or doing it during the 2nd and 3rd week, there is no need to reverse the trade. Only during trend reversal time, beginning on the month end time, there should be such trading opportunities of reversing the trade. In Asian, which broker provided the price feed? I given the link here. As far as the trading platforms are concerned, you may not be able to see the GMT time, or some platforms allow you to set the GMT time. But you can use the live market quote page as a reference. Then FXX. The AUD will rise, first drop or rise for the week beginning first move. AUD has already done the upward move and the downward move. They will slowly gain the levels. Then chart there. Today GBP will be above 1.60 level in European chart. Will also go down further. See, not necessarily. When they move Euro also in tandem along with that of GBP, then Euro GBP can come to about 0.8350. Then SID. Hedging is not allowed in US trading. Use stop loss, no alternative. Yeah, hedging is not allowed in US platform, and also the leverage is very less. So one has to be very careful and try to do only safe trades during session start and session close time. And at least keep stop at entry once the position makes profit. The alternative will be use the other currency as the hedge. So as I explained that now Euro, you are trying to take a buy. They are making a slow dip in the case of Euro and also in the case of GBP, as I explained. So you can use the Euro Yen or GBP Yen as the hedge. Otherwise, any of the European currency as the hedge, wherever the net change is seen. Euro USD 62 net change, then you have to see whether any of the Euro cross which is showing 62 pips net change. Otherwise, you cannot use it. Then that hedging will not work. So none of the Euro crosses are showing 62 pips. So in such a scenario, when both are moving in tandem, when Euro is in positive net change, GBP is in positive net change, you can keep a sell stop in the case of, you can keep a sell stop order in the case of GBP as a risk limiting factor. How is the change column in market quote is calculated? That is, net change is from that of the previous day close. So from that of Friday US session close, current level is 62 pips positive net change. Always it is from that of the previous week. Day close. Okay, no more questions. So I take this opportunity to thank FX Trade for the facilities given in the webinar, and thank you all for your kind presence and listening to this webinar. Then I'll come back on 19th September and try to review the market for you and also the forecast what I have given to find out whether the market is moving in tandem with the forecast or just the opposite. So we'll objectively review it and take up for the forecast for 19th and 20th during the time frame. Thank you one and all. Wish you all happy trading. Trade carefully. Thank you.